You see, we're on this journey. Today, crypto's a $3 trillion asset class, but I think it's going to 100 trillion by, let's say, 2032, 2034. So within 10 years, it goes to 100 trillion, which would be the largest, fastest accumulation of wealth in all human history. The other really crucial one is only have 3 to 5 of the top assets in your main holding. This is to de-risk. You see, the space is going to go up plenty. You don't need the fastest horse in the race. You need just good, fast horses. So for most people, just Bitcoin is good enough. Or maybe you want Bitcoin and Solana, because Solana has been, the blockchain with the most network adoption this cycle. Or maybe you have Bitcoin, ETH, and Solana. So if it does sell off 35%, you've got a bit of extra cash, buy it. If it's not the end of the cycle. If it is the end of the cycle, then you wait till it goes down 70% or so, and then you pile in as much of your savings as you can on top of your existing holdings and let the magic compound over time.
Raoul Pal reveals the ultimate crypto survival guide you can't afford to miss. With the market constantly shifting, these strategies will help you safeguard your investments from devastating losses. Learn how to avoid common mistakes, secure your assets, and take control of your financial future before it's too late.
You see, we're on this journey. Today, crypto's a $3 trillion asset class, but I think it's going to 100 trillion by, let's say, 2032, 2034. So within 10 years, it goes to 100 trillion, which would be the largest, fastest accumulation of wealth in all human history. I sent this tweet out in January 2024. I maintain that this alone will help you. So this tweet says, remember, no leverage. So what that means is if you start borrowing money against it by using perps or other means, you have a risk of losing your coins if you get something wrong in a pullback. And then if you lose your coins, you're out of the market and you have fucked this up. So please don't use leverage. Leverage is for experts and shorter term traders and people who really know what they're doing. Even then, I personally never use leverage. My job is not to lose my coins. Now, really what it's about here is not doing stupid things. So not suddenly FOMOing into a trade because something else is going up more than your coin. That's an easy way to lose money because you end up usually getting into a trend too late. It then reverses, you've then lost money, you then try and get back into your old trend, your old trade, that starts outperforming and so on and so forth. It's a mess. Don't do it. The other really crucial one is only have 3 to 5 of the top assets in your main holding. This is to de-risk. You see, the space is going to go up plenty. You don't need the fastest horse in the race. You need just good, fast horses. So for most people, just Bitcoin is good enough. Or maybe you want Bitcoin and Solana, because Solana has been, the blockchain with the most network adoption this cycle. Or maybe you have Bitcoin, ETH, and Solana. And then maybe you want to go a little bit further out the risk curve, whether it's SUI or Celestia or Say or whatever that one is for you. But remember, don't have that as your main holding because, again, we don't want to fuck this up. So I had Bitcoin, and then I had a large basket of 10, 15, 20 different names thinking, well, these will work. Over time, my basket should work. It ended up being a wallet of shame. Most of those didn't work. I got a couple right, but they didn't really pay for the losses. It left me unfocused. I wasn't focusing on what really mattered, and it was my Bitcoin bet and then my switch into Ethereum. That was a big bet. But that wallet of shame is something you'll all go through, but try not to do it. Try not to go too far out the risk curve into mid-size and smaller caps and hold a big basket of those saying, well, the AI theme's going to play out and the meme theme's going to play out and the real world asset theme's going to play out. I want an allocation to all of these. It generally doesn't work. Honestly, it is not easy. So don't try and be a genius. Just let the secular bull market rise the value of your wealth. That's what I'm trying to do here. You see, exchanges can blow up. Now, we've got much bigger exchanges and they're super high quality. Coinbase and Kraken, etc. They've proven themselves over time. But generally, the magic of crypto is it's an asset we can self-custody. So that means nobody can take it away from you if something goes wrong. And I think that's one of the key use cases. Now, if you're new to crypto, don't worry about that yet. First buy your crypto, store it on an exchange, and then go out and buy something like a ledger device and figure out how to use that. That stores your passkey for your crypto in a safe and secure way, so nobody else can get access to it. But again, you need to be really careful where you store your seed phrase that gives access to that. But what it allows you to do is it becomes portable. So if you have to leave a country, have to move around. You can then hide the seed phrase, hide the ledger device, and you're in control of your own assets. That's a really key thing. I think self-custody is incredibly important. You may not think so now, but one day it will be. People lost a lot of money holding it on FTX, for example. Again, that's the reason I like self-custody. Now, for those of you who have more tokens, then you get into a multi-sig world where you have multiple signatures, so nobody can move it without a consensus group of people agreeing to that. So that's the next stage forward, whether it's Gnosis or a number of others that allow you to do that. So those things are important. Don't lose your token. The other key thing, the actual real hack to all of this, is just hold for a long time horizon. Just holding means you don't do anything. It's very difficult to make mistakes. You're self-custodying, you're not trading, you're not trying to scalp anything, you just hold it. And guess what? Over time, Bitcoin's done about 150% a year, including 3 kind of 70-80% drawdown. And by doing nothing, you just compound the returns over time. I like to add to my bags into the big cyclical sell-offs, that once every 4-year down cycle. I like to add, and then your holdings compound and you make more and more money each time. But just have a longer term time horizon. For sure, look at the hourly chart. It's fun. I've got them up all of the time, but I don't trade. I just hold. I barely do anything. I make a couple of asset allocation switches in the entire cycle, and that's it. And magic happens.
In today's volatile crypto world, sticking to the basics is more important than ever. Raoul Pal stresses the importance of focusing on top-performing cryptocurrencies like Bitcoin and Ethereum while avoiding the temptation to invest in risky meme coins. FOMO is a dangerous trap, and leveraging can lead to catastrophic losses. The key is to prioritize long-term growth over short-term gains. Avoid spreading yourself too thin across dozens of assets. Instead, allocate your resources to a select few that are proven to have staying power. Pal also emphasizes self-custody. Store your assets safely using hardware wallets and multi-signature protection. By following these principles, you can weather the storm and prepare for future success.
But lifestyle chips are the ability to take off some profit in things that really matter to you. So if the markets turn around, you don't time the top properly, or whatever you're trying to do, you've paid off a mortgage, or you bought the car, or you bought the holiday, you've done whatever it is that you need for your own life. And you're going to hate selling out when you have to take some lifestyle chips off. But at the end of it, your future self will thank you massively. So make sure you think about that. The time for lifestyle chips is somewhere between December and March. We will obviously get more volatility in the space. Expect 30% pullbacks frequently, maybe 35%. These will happen. Maybe Bitcoin goes to 100,000 and then pulls back to 70,000 and goes up. Don't freak out about it. It's really normal. But remember to take some lifestyle chips off at some point. Then you're just going to have this sense of security that you can run the trade longer. You can't just leave it all in and hope that you get it right. So again, I'm trying to save you from yourselves here. Buy the fucking dip if you can. So if it does sell off 35%, you've got a bit of extra cash, buy it if it's not the end of the cycle. If it is the end of the cycle, then you wait till it goes down 70% or so, and then you pile in as much of your savings as you can on top of your existing holdings and let the magic compound over time. Because Bitcoin is much more secure as an asset over time in terms of its adoption and acceptance at large. Then you can diversify out into riskier stuff. But buying the dip would have made me a fortune. The FUD cost me money. Trading cost me money. I didn't do the hold. You see, so there's a number of ways you can fuck up. You can lose your token. That's when an exchange goes down. Or you start using DeFi and you put your money for a yield into some stupid shit, which is what people did in Terra Luna. And again, I did not do that. Or BlockFi or Celsius or all of these things. Everybody lost money because they parted with their token. Storing in the wrong exchange. OGs remember Mt. Gox. They still have been paid out. That was, 10 years ago. So that's why I don't like to keep things on exchange. Hold on, let the gains compound. And that failed. A lot of people have got wallets of shame from the NFT craze in 2021, and many of you will end up with a wallet of shame from the meme coin craze. So in meme coins, keep it to a small weighting, please. It's great fun, get involved. But if you've got too big a weighting, you risk losing everything. And then you fucked up with rule number 1, which is don't lose control of your token. And leverage is another one. If you remember, I bought call options on E. I knew I could lose 5% of my capital. Most of you don't trade options, but you trade perps. And perps give you leverage, and before you know it, the market has that 35% pullback that you expect, and you've lost control of your tokens, and you're out of the game. Staying in the game is how we get from 3 trillion to 100 trillion. I don't want you to fuck this up.
Raoul Pal's advice is a wake-up call for every crypto investor. Don't let greed or fear cloud your judgment. Focusing on secure, long-term investments like Bitcoin and Ethereum while protecting your assets will give you the best chance of thriving. Don't risk it all on speculation. Stick to the fundamentals, take profits strategically, and prepare for the future with confidence. For expert insights, subscribe today and stay ahead of the curve.